My name is Thomas. Just want to give a brief introduction of myself. I came to Dubai exactly 1 year ago. I joined Jamil Moto as a CFO, and I spent the bulk of my careers with FMCGs. I spent 15 years with Nestle, 2 years with Unilever, and 1 year with Del Monte. And I also have a vast experience in terms of geographical. I came from Singapore. I started my career in Singapore. I relocated to Malaysia, and then I also spent a couple of years in Ghana, and also 3 years in China as a CFO for Totole. And then I took on a regional CFO role with Unilever, doing the spin-off of Lipton's. That was in Malaysia, as a regional CFO in Australasia. And I have 1 year, I'll call it, I'm a farmer in Del Monte, because in Philippines itself, the size of the plantation of Del Monte is half the size of Singapore. And they exported more than 100 million boxes of fresh pineapples. And I'm really honored to be in Dubai and joining this company, Jamil Moto, where we are driving the distribution of new cars in Europe, South Africa, Australia, as well as Middle East. And very, very honored to be moderating this discussion. And this discussion is very close to our heart at this point in time, because budgeting is a process where we really have to, this is a budget season at this moment, and it's really a process where you have to explain in terms of your current business situations, what are your action plans to achieve higher goals, and also, not only that, this is also a process where the finance will be leading this whole budgeting process, where we are bringing in terms of technologies, because other than looking at numbers, beautiful PowerPoint in the slide itself, you have to go through the process of discussions with the commercial teams, getting the right digital tools to bring up the numbers, and then at the end of the day, we have to present to the board of directors in terms of our plans of our current situation and how are we going to achieve bigger growth. And this, I'm very honored to be joined by distinguished speakers itself. It's really interesting. I'm having a coffee chat with them, and in that 5 minutes, I've learned so much from them in terms of how are they approaching in terms of budgeting, business, finance in their field itself. So I'd like to start off with these panels. Maybe the first questions, I want to pick the brain of Harsh, Mr. Harsh itself. You are directors of transformation in Damek Properties. Today, we are not talking about property investment, because property investment is a buzzword in Dubai right now. But I just want to pick your brain. What specific budgeting strategies or framework are you currently using in your organizations, and what result have you seen? And also, please introduce yourself.
Thank you very much. First of all, I'm Harsh Punjabi. I am, as they were talking about, I am a Director of Business Transformation at Damek Properties. I lead the transformation initiatives for the Office of the CFO. And in doing that, I have been focusing exclusively on the FP&A side of things at Damek. In my past life, I've been a management consultant for close to a decade. So I really got the chance to practice what I preach. So that's the best part out of it. And in doing that, what I have been able to do is bring some of the best practices from various industries I have been part of as a consultant, be it pharma, be it professional services, technology, manufacturing, and bring all of that into a way where we can talk about what works and what does not work. So that's my endeavor at Damek. And coming back to the question on budgeting strategies, look, the single best strategy that I have been recommending to all my clients in the past and now at Damek is to focus on two elements which are central to the name FP&A, which is planning and analysis. We tend to take the budgeting aspect of it too seriously, and that's where it becomes very difficult to split the line, because what you want to do is make sure your business teams spend enough time planning. The financial budgeting aspect of it is just a translation into numbers. So at DMAC, that's what we try to do. We try to enable our business teams to be deeply involved into the operational planning aspects of their side of business. And we let them focus on those core competencies in a very granular depth, because they are the ones who know best. My sales team will know best what is there in the market. My IT team will know best how many licenses do we need everywhere. So we don't try to interfere in those aspects too much. What we try to do is make sure we enable them with the right tools so that they are able to analyze everything to the right depth and give us what we need at the level we need. So in the budgeting side of things, we try to move a lot towards driver-based budgeting, which is how we should have every mature organization move towards. And in doing that, those drivers enable the finance team to be able to ask questions to the business, challenge their assumptions during the process. And that's what budgeting is all about. Keying in the numbers in a platform is just the administrative side of things. The real discussion, the real business partnership of finance is when you talk to the teams, try to understand how they are doing, what they are doing, and how they plan to change in the next year. And that's what we try to focus on. Hope that covers everything.
Yeah, thank you. I think you pick on two very good points. I mean, one of them is to give the business team enough time to plan. I think because the budget process is quite stressful, and we also during this time, I mean, some companies uses 5 months to do planning. Some of them use 1 month. Some of them use 2 months. Yeah. And the key is that we don't want them to be distracted to achieve the numbers. The business goes on. Yep. Just that this is really a thought process of what is in the future for us. Yes. But I just want to pick on your brain again in terms of framework. What framework you are using and what result have you seen?
So we use a combination of many things. We try to focus on the most important costs. We try to go really deep in them. So we enable the business to go in a zero-based manner on the major costs, and on the revenue side of things, again we go zero-based. But we try to introduce drivers within that process, so that zero-based is not to the last level and trying to come up with a plan which does not make sense on a top level. So we go zero and driver together, and when it comes to the minor and more regular nature of costs, we try to go trend-based in those. So that way we are able to achieve a good balance of zero-based, driver-based, trend-based, all of them working in tandem to deliver the ultimate outcome.
Okay. Thank you, Harsh. Thank you. So let's move on to Ms. Tuku. She's the head of Middle East Personal Care Divisions for Unilever. I think the question is, how can CFO build and sustain a culture of discipline, value-focused spending across the wider organizations?
Thank you. Thank you, Thomas. So let me introduce myself. So this is Duygu Purjan. So I'm a transformational CFO with almost 2 decades of experience at Unilever. I had the privilege to lead organizational, business, and digital transformations at a global scale. And recently, I was the regional CFO for Unilever. So pleasure to be here and to share my experiences. So when we come to the question, so how we can drive the value-driven conversations and make it part of our organization, and how we can create a cost discipline, I will give 5 points with some of my experiences. First one is of course, setting the tone at the top and making it clear why we are doing what we are doing. So I think it is very clear, because when you are CFO, when you are a finance leader, of course there are a lot of mandates, and you have plans, KPIs, requests, for targets from the team. And you are influencing a big population in the organization. So it's very important to explain how the expenses, how the revenue is impacting the strategy, financial growth model, and the results. That is very important, and that should be aligned at the top. then that is the first and major thing to bring the culture in. The second one is, I think we all know, make every dollar count, make every penny count, and that is the return on investment, and that is our forte, of course. But it is not only about cost cutting. It is, my colleague Harsh mentioned about the zero-based budgeting. When I first came here, so 3 years ago to Middle East, of course the post-COVID era, it is high inflation era, and that is the first thing is to shake your P&L and balance sheet. So I have initiated this zero-based budgeting across the board and questioning why we are spending it, what's the purpose of it, and deriving that through every line. Actually, we have delivered tens of millions of savings across the board because there are inherent costs, like we are paying to the agencies, we are paying for the overheads, there are like costs at the factory. So when you move around, when you visit your customers, suppliers, factory, whatever your business drivers, you will see actually your P&L is not talking to it. And that is actually zero-based budgeting, not only intensive Excel exercise and then challenging every penny. Another one is of course, the empowering teams and setting clear boundaries. So I call it like give liberty to the teams within a framework. That will make your life easier, and they will feel more empowered and bring the ownership. So especially in where I have been leading the multi-country, multi-category businesses, so as long as you know your overall target, you set a range of how each business unit or each function, whatever the one level lower operating unit in your organization, giving them and then let them make the decisions, make the choices. They will understand the consequence, and you still hold them with the overarching range you have informed them, and then they will start to understand, oh, I spent the money here, I invested here, and then it's not coming. And it will be more of a conversation, and in terms of how they can achieve that range, and they will start making smarter decisions. Another one is of course, I have mentioned about going to the customers, salespeople, go to the roots of your business, whatever it is. And it is one thing, again, though, when I first arrived, this business was not growing at all, actually declining. And of course, I have said, I looked at the trends and then everything, each CFO loves their numbers, but also I started to see a pattern. So we were driven, our sales was driven by volume. And then the GSV, let's say, gross sales value. But there is a lot of value lost in terms of when you come to revenue and the bottom line. And it was mainly driven, the sales team was thinking if they sell this unit and this unit, it is same. But actually, of course, especially in FMCG, there is a huge element of price tiering and also the mix element. I have introduced NRM, Net Revenue Management, where we have driven the mix. And also, it's not only a central Excel analysis, but when you go to the trade visit, you explain it to the people on the sales team, they start to understand, actually, this contributes to my sales target, my incentive. Then they will start to sell those products more, and then your strategy at the top starting to get realized. So we have managed, and then actually I'm very proud of this, so around 4 to 5% margin just came because we converted selling better margin, better turnover revenue products by activating all the sales team on the ground and changing their mindset. So last but not least, of course, the recognizing and rewarding, right? When we are trying to change a culture, of course, there will be some voluntary people, some smart ideas, and some reluctant people. So that's very important to create a platform where you can recognize and reward, so you encourage the rest of the organization. So again, I have created a cost and agility platform where we have looked into how we can create fuel for growth. So how we can create savings, how we can enable the people in the factory, in the logistics, in the sales, wherever they are in R&D, and then bring new ideas. So all the senior leadership we have met bi-monthly and bring those ideas. So people started to get excited. And also finally, we have increased our savings from 2% to 7%. So these are few examples, but it always starts with even with the budgeting. We are talking a lot of technology and everything. There is always a human element, and then going to the basics and bringing them together. Of course, the world is changing, so we need to stay agile with the market shifts. But these 5 things, like set the tone at the top, empower your teams, and build the trust cross-functionally, and also recognize the brilliant ideas. So those would be my points around the culture.
Yep. Thank you. I just want to ask probably the questions that's in everyone's head, because we are all finance. The world is perfect if the sales team and the marketing team stay in line, spending as little as possible, and the sales team maximize giving us as much growth as possible, because since we are talking about value-focused spending. So do you have any experience to share when the marketing team wanted a bigger budget to do a bigger launch, and how do you get this across to the senior management to get it approved? Because of course, as I say, we love it when it's low expenditures, high return. But this doesn't really happen, because since you are working very closely with the business team, they definitely have some sort of this type of demand. So how do you tackle this in the whole conversation of budgeting?
Yeah. So of course, everybody wants more money, right? So that is how it works. For me, the biggest conversation is, of course, we can always ask more money and then try to get it. But what is the business case behind it? What are we giving back? So if we align around the value creation, so around the bottom line and revenue, so then I'm deriving the conversation from there. Yes, I want extra 2 million. That's great, but it's not only putting a fancy product on the shelf. It is more about how much revenue we will get, which channel we will use, how you will use that money, and what is the return on it. So I think when I set the tone at the top, because generally it comes the request from there, the main thing I can recommend to any CFO is make sure you align your value creation with the rest of the team. Then the conversations will get easier.
Yeah. Thank you so much. Thank you. So, Mr. Sujay is the CFO at Vanta, and I want to pick your brain on these questions. Has the role of the CFO evolved? How important is collaborations with CIO and other business leaders when it comes to shaping budgeting strategies?
Thanks, Thomas, for having me here. So let me first introduce myself. I'm Sujay Sarkar, CFO for Advanta Seeds. Advanta is one of the top 10 seed companies in the world. We are in the business of hybrid seeds. And before Advanta, I've worked with Olam Group, which is in agri-commodities, trading, manufacturing, processing. Been with them for 14 years, of which I spent around 11 years in Africa in multiple different geographies. And prior to that, I worked in financial services, private equity, global capability center, manufacturing, and started my career with EY. So I've done a host of M&A, acquisitions, divestments. I've done capital raise through private stake sale to private equity, rights issue, and various other structuring exercises. So coming to your specific query, I think CFOs have now come to a point where they are no longer regarded as a gatekeeper for allocation of resources. we need to partner the CIO and the entire C-suite in making sure that not just the resource allocation happens right, but it is tracked, monitored, and reported upon in the right fashion and the format and in the way a user can make best use of. And partnering with the CIO, I think, is most critical because I think the basic tenet of every decision making rides upon having the right data, which is correct, available at the right time, and giving the type of insight which will help a business leader take the right decision. So starting from, let's say, the base ERP systems, which your business is placing upon or riding upon, to the right CRM, to the EPM systems. So these are, I think, very basic data points which you need to take a very well-considered decision because these have long-term impact. You cannot possibly be changing these calls every second year. So partnering your CIO in looking at all of these options, so not just from a technical point of view, but also whether it meets your business-specific requirements, industry-specific requirements, is hugely critical. As a CFO, I would look at these decisions also from a ROI perspective, whether it makes sense from a returns perspective over a long-term period. I partner my CIO in also looking at the analytics piece because one is getting the accounting right, but am I able to derive the right kind of analytics information which my business leaders need, which every user across the globe would need. And I want to decentralize the availability or access to information. I don't want finance to be, the one function which provides data and analytics. It should be freely available and in a user-defined format. So when we are looking at this internally, we always try and see what each specific function, be it sales, marketing, production, supply chain, HR, would need in what is the end use of that data point, which decisions do they take on a day-to-day basis. And then we go back to the CIO and the IT team to try and design systems and processes which would cater to those requirements. Finally, I would also mention that budgeting has moved away from giving a static number as a target for the year. We are living in a very volatile world, and we need to be agile and move along with the times to give an effective response to changes in both external environment as well as regulatory changes. If tomorrow I wake up and see another tweet or a news item saying X country has imposed such tariffs on another Y country, regulations have changed, export duties have changed, Fed has announced a rate cut, I cannot be tied to a budget which was prepared on the basis of assumptions where these factors were not present. So I should have the capability to, make rolling forecast, make a multi-scenario analysis where I can work out different drivers, assumptions behind each different budgetary forecast or being allocation done. And we should be, capable enough to reallocate resources within geographies, between products, between business segments, basis what is the current reality. If I stay rooted to a fixed budgetary allocation made at beginning of the year basis a completely different set of assumptions, I will not be able to drive my business effectively. So given these realities, I think partnering the CIO in delivering a technical solution which meets all these requirements, I think is super critical. And in today's world, I would say we are not, let's say, the originator of the budget. The entire C-suite is a co-creator and a co-owner of the entire budgeting process.
Yeah, Sujay, because you actually touched on CRM, and I believe that in the audience, when we're doing budgeting, a lot of companies are still relying on Excel spreadsheet. So just touching the experience on CRM, is there any tips for us to take it back to try to convince companies that we need to invest in CRM, that this is not a cost but it's an investment?
No, absolutely. So I'm not saying that we have been able to eliminate Excel and we don't use Excel at all. That's not the case. I think it is part and parcel of a life. But what I think needs to change is the fact that Excel cannot be the sole reporting tool or the sole basis of information sharing. If I give a very basic example, if my sales team is going to meet a customer, one of the basic things he should be able to see on his phone or a laptop is the customer outstanding statement, overdues, open purchase orders, availability of inventory. Because what is the point of having a face-to-face customer interaction if he cannot provide these basic data points to the customer? And Excel is not the best suited tool for these kind of interactions. So there, the importance of having a good CRM comes into play, and a CRM which is agile, which is able to give real-time updates, which is able to give lead lag times when we are having these kind of interactions, I think is super critical.
Yeah. Thank you so much, Sujay. Yeah. Good morning, Mohammed, Dr. Mohammed Al-Arubi. Yeah. Just want to pick your brain. I mean, how are digital tools and technologies helping finance team improve visibility, control, and decision-making in the budgeting process? Maybe you want to introduce yourself first before you answer the question.
Yeah, good morning, everyone. I'm Mohammed Rubi. I'm a global finance and strategy leader with more than 22 years of experience in global multinational companies like Johnson & Johnson, Novartis, Takeda, and Allergan. I handled multiple international senior roles across Middle East, Africa, Southwest Asia, and Turkey. And currently, I'm managing a global commercial finance role. So thank you, Thomas, for that question. I believe that's a very important question. And everyone now is talking about technology, talking about AI and RPA. But before talking about technology, I believe we have first to address the challenges of having a manual budgeting process, right? And as I believe all of you already mentioned at the beginning, that having or building your budget using spreadsheets or Excel, I believe that's not the best way to build your budget. I met many customers, many clients that most of them having more than 40,000 products, 40,000 SKUs. Can you imagine a company like Amazon or Google, they build their budget based on Excel file? Definitely that's not be the best way. So first of all, let's address the challenges of having a manual budgeting. Number one, governance, right? If you have all the budgeting process using Excel files or spreadsheets, you lose the governance, right? You don't know who changed what at which time. Sometimes after you presenting the budgeting, to your board of directors, you found someone changed the numbers. So definitely, you're gonna lose all the governance if you implemented your budgeting using a manual process. Also, sometimes after we completed the full budgeting process, spending days and days, consolidating numbers, building budgets, and after we presenting the budgeting to our senior leadership, they told us that does not meet our expectation. We expect more sales, we expect more EBITDA improvement. So we have to reinvent the wheel again and using our manual process, which takes a very, very long time. So what I suggest is to automate our budgeting process. And I believe one of the best tools to automate our budgeting process is to have like EPM system or CPM system. Why we need such kind of systems? Number one, you need something to manage all the governance, right? I need to give access to my sales people to input only price and volume, right? I need to give access to HR people to input only personnel cost and headcount. So I need to give access to the right people to input the budgeting process with a full governance. I can know who changed what, which time, which users, which give us a very good level of control. Number two, having an agile budgeting process. If you have an EPM system or CPM system, you can, in few minutes, once everyone completed their input by one click, you can get a full consolidated budget. And instead of asking your FP&A team to spend, days and hours just consolidating, tens and sometimes, hundreds of templates from different functions, different departments, which will be a very time consuming. So having a consolidation in no time, that's one of the key benefits of having EPM or CPM system. Number three, during your monthly management reporting process, I have to compare the actual versus budget or versus forecast or versus latest estimate. And if you have your budgeting process manual, you have to get the actual data from your ERP system and having your budgeting manually. So it takes too long time to compare also actual versus budgeting using a manual management reporting sheets, right? At the same time, also, we need to spend too much time to make data mapping, right? Sometimes you put the actual at different cost centers and getting the budget at different cost centers, sometimes at different product level. So spending too much time just to make a mapping, that's another issue. So if you have APM system or APM system, in no time, everything will be consolidated. You can generate hundreds of dashboards and reports comparing actual versus budget using that APM system, because you already built your budget in the APM system, and the APM system already connected with your ERP system. So you can compare actual versus budget in no time, in a very good agile way, and at the same time also you have a very good dashboard. Number 3, running scenario planning. The digital solution like APM or CPM system can help us to run different scenario planning. I can input different business drivers, revenue drivers, cost drivers, and run some assumptions, and I can provide to the management different scenarios, because management now is not only interested to see one version of budget, right, or one numbers. They need to see scenario planning. What will happen if the oil price increased by 10%? What will happen if the oil price increased by 80%, right? What will happen if we have a new competitor? So I need to provide the management with scenarios, which could be done through very agile systems like EPM system or CPM system. The fourth important point of having EPM system or CPM system is to have integrated planning. I see in many organizations that financial planning is completely isolated from the operational planning. Supply chain and salespeople, they have their own, demand planning process, S&OP process, but it's completely, disconnected from the financial planning. I know finance team building their, rolling forecast, cash flow forecast, and that's completely disconnected from the demand planning forecast and the supply chain forecast. But if you have EPM system or CPM system, you're gonna connect the dots. You're gonna connect the operational planning with your financial planning and also with your strategic planning. So having a full integrated planning is one of the key important benefits of having EPM system or CPM system as well. In addition to that, I believe AI now became a very important help to the finance people, especially the FP&A team. So I see AI now embedded in different EPM system or CPM system. So we can use also AI to run different, predictive analytics. I can use AI to run different scenarios, run for me very complex, scenarios using AI. I can use also AI to help me in predictive analytics. They can run different, prediction using regression analysis or complex regression analysis using AI tools as well. Last but not least, also we can leverage RPA, right? I can leverage robotic process automation in the FP&A team, and I implemented the project in one of my previous companies. That at the beginning we had to spend more than 70% of our time just downloading the data, cleaning up the data, and until we compare the actual versus budget, and then finding the variances and sending to each stakeholders and to each business partner, asking them about the variance, and they have to comment, right? So we had to spend more than 70% of our time just on data cleanings, data mapping, building reports. And we have very tight time just to sit with the business and provide a real business insight. But when I implemented the RPA, I asked Mr. Robot, once Mr. Robot enters to our FP&A functions, the robot had to download all the reports on our behalf without any human interfere. Then the robot had to compare actual versus budget without any human interfere. And also we said in the bot that any variances above 200K, please identify the variance and send the email to the right person without also any human interfere. So we succeeded to fully automate our management reporting process using the RPA, and we freed up our time to spend the quality time with our business, sitting with the salespeople, sitting with the commercial, with the supply chain, and asking them the right question and to provide the real business insights to help the business for sure to mitigate risks and capitalize on opportunities. So we can see how important is technology, EPM system, CPM system, AI, and RPA. Yeah, that's all from my side. Thank you.
Wow, I really learned so much from you. Just to touch on a few bases as well. You were mentioning about consolidation, because based on my previous working experience, sometimes we took 80% of our time just to consolidate information and only have 10% or 20% of our time to analyze the numbers itself. But based on what you mentioned about the RPA, and all this AI is really going to help us in terms of in terms of our budgeting itself. And I wanted to ask you a question just to pick your brain. And do you think AI is a buzzword, and how does AI going to fit into this whole budgeting process?
Yeah, I believe AI is a big help to the finance function for many reasons. Number one, AI can help us at the beginning in analyzing our data, first of all. So I can use AI to analyze my data, digging more and more into data, and saving my time. Instead of I spend hours analyzing the data, running trends analysis, getting the insights from the comparisons and from the trends and from all of that stuff, AI can help me in that. Also for regression analysis, sometimes, Thomas, to run a predictive analytics, we have to run different complex forms like regression analysis or multiple regressions. But AI can done for that in a few seconds. Just I can share with them the historical data, sharing with them the trends, the patterns, and they can help me to have a predictive analytics, even if I have a massive data, because they can run it in no time. Also, AI also can help us in writing the right comments, getting the right insights. For sure, we have to add our input and enhance the data, but at least AI can help us to manage more than 70% of the job. Then the remaining 30% we can add it as a based on our experience and our business understanding.
Yeah. Thank you. Just open one questions to all the panel itself. I mean, I think we are looking at budgeting. We are looking at maximizing impact itself. So maybe to Harsh, maybe you can start first. What do you see as the biggest opportunities or risks for finance leaders in reshaping budgeting to maximize impact?
Like Mohammed has brought out very, very important points and prerequisites to the budgeting process. Like for example, the data point. Now there are two aspects to data. One is the availability of the data, and the second one is the data model that you have built within the organization to support your budgeting process. These are two very important themes because we talked about AI. AI is a definite opportunity there, but at the same time, if we've not built the right data, clean data availability, if that pipeline is not clean, and it does not feed your data model properly, then you are looking at mixed results. Again, the second aspect is the data model itself. What is your core business model and how well your data model is representing that? And how does it take into account all the different dimensions of your business is another aspect that comes into play. Because if you try to use AI for all these aspects, for you to be able to draw the best results out of it, you need to have a solid base behind it. So both these two aspects are very important. And the third is the process. Because throughout the way you imagine the process to run, we've tried to implement AI in our reporting frameworks, and we've tried to do it in several ways where we said, okay, we want to make sure there is an operational layer of reports, there is a managerial layer of reports, and there is an executive layer of reports. Within these reports, how can we make sure that the KPIs that are generated at each level speak in a manner so that they feed information upwards is something that we have already experimented with, and we've had some success in that. And that's how we learned that there is a lot of importance that needs to be placed on the data model itself and the way data is fed into that model. So these two aspects play a very important role so that the underlying AI technology can understand what's going on and give you the most out of how you can, what kind of inputs you should be paying attention to. You talked about some anomaly detection in there. You talked about, okay, some variance analysis in there. What is the right way, what is the right signal to be sending upwards is something that you need to incorporate into your process first. Otherwise, you are more likely to see garbage results from the AI as well. So that's one big opportunity. And the other one is, we've been saying it for years, but Mohammed also talked about it, the integrated nature of planning. The more we integrate all the different departments, and this is exactly what I was saying when I started out, that each department, if we are able to build their ownership and buy-in into the process in a way that they are able to formulate assumptions and they are able to answer and rise up to the challenge of those assumptions, then that's the true success of the budgeting process. Because the numbers are only an output, which you would, maybe in an agile world, you would change in the next month, or maybe in the next 15 days if there is a new tariff getting announced. So the numbers are an outcome. It's the underlying process of how you arrive at the numbers, the drivers, the assumptions. That is what holds true value. And that should be easy to maneuver and change. So that's where the real opportunity lies.
Thank you. Thank you. Duku, you want to share your view as well?
Yeah, let me build on. Definitely what you have said, Harsh, but for me, the biggest opportunity looking forward is, of course, the real-time and data-driven budgeting, right? So there are a lot of opportunities there. Of course, the fundamentals should be there. It is 5 steps ahead for some organizations, but definitely it should be the way to go, because the tools like AI and advanced analytics really helps to identify the trends, give us ideas. Sometimes I'm using, oh, that's a good catch. So I see the potential of it. But I will add also a risk into that, over-dependence on AI or these kind of tools. So, of course, the human oversight. So when we don't have any human oversight, these kinds of outputs, and I know in most of the organizations it's the biggest fear, so that can lead to really blind spots. So sometimes, even today, maybe with AI, without AI, but I'm getting reports from across the organization, and when I click down 2-3 times, I see empty eyes staring at me because they say, I just got it from X system, that person. So that is very important, and it is something I'm focusing on, is how to build future skills, judgment, and ethical considerations, because the systems can do things for us, but as the new generation, because we are a bit experienced and have seen the manual interventions, how to develop the problem solving, analytical thinking, critical thinking, and also to have the gut feeling into the things we are doing. I think those are the must-have skills going forward, and we should look in our teams while building the technology for future.
Yeah. Mr. Suji?
I agree with my colleagues completely. So, yes, it is possible to, give out standardized, rule-based jobs and activities to be done by AI. What you should not be doing is you should not outsource the analytical thinking part to also to be done by AI. So you still need some human supervision, you need some human insight to drive the entire process. And to give some examples, so we could possibly use AI in, let's say, regulatory filings, which is a standardized form-based activity, but would not advise anyone to have an AI-generated regulatory filing to be filled in and filed without any human oversight at all. We are trying to see use of AI in multiple other ways. For example, to generate variance analysis, which can talk about various drivers which are resulting in X variance. If I look at, say, sales variance analysis, so what is the by product, by geography variance on account of price, volume, FX movements is something which AI can generate. But it would still need a business leader to look at that and see whether it makes sense and it is giving the kind of insight which I'm looking for. We are always conscious of not placing the cart ahead of the horse. So yes, it is a fad and a buzzword, and every organization would like to showcase some AI-driven projects or activities being done out there. But we are taking a very cautious approach in this sphere. And wherever we are trying to use AI, we always try and maintain some bit of human oversight. Some more areas where we can possibly use AI is in the arena of fraud analytics, where you can have system-generated checks and balances happening in real time rather than as a post-mortem analysis. Then there is sanction screening. So you can automate the process of creation, modification of masters, be it your customers, vendors, suppliers, service providers. But you could possibly use AI to automate the entire process of sanction screening when you are doing the creation of a new master or modifying something. We can also have AI-generated controls in the sphere of procurement. That is one area where I guess there's some possibility of maximum leakage and frauds, etc. So AI is a good tool to try and implement some systemic controls in there. We are looking at using AI in non-finance areas as well. For example, in HR for helping us with the interview process, screening of resumes, and using AI and supply chain analytics to plan for purchase of materials, keeping in mind the lead lag timelines and the past experience which we have had with various suppliers. So these are some areas where we have taken some baby steps. I was just discussing before the start of the session with my colleagues on use of AI for drafting and vetting agreements and contracts. If you have a history of, say, a decade of different types of contracts, agreements, which you have already signed, vetted, reviewed for various business purposes, you upload all of that to a particular system which acts as a digital archive. You could use AI to get trained basis those contracts and give suggestions while vetting a new contract which any user has submitted. So instead of me reading a 50-page agreement, I could possibly go directly to those areas which are redlined by AI, that these are critical, this does not sync well with the historical contracts and agreements we have signed for similar purpose. And it helps me take a decision and do the reviews much faster. So these are, I think, very basic examples of use of AI. I'm sure there are more high-tech industries which are using AI for much more advanced purposes. But these are the ones where we have started to take a look at.
Thank you, Mr. Sujay. I believe we have a bit of more time. So maybe Dr. Muhammad, you want to share your view as well?
Thank you, Thomas. I believe there are two important points regarding the budgeting process. Number one, I believe budget or the annual budget standalone is not enough to use it as a planning tool. Because when we build the budgeting, let's say your financial year from January to December, so we always, finishing our budgeting or get it signed off by, maybe October or November, right? We cannot sleep for 14 months comparing versus the same things, right? Many things changing every day new changes, new dynamics. So we cannot only use the annual budget, right? So we need something more dynamic than the annual budget, which is the most recommended one is having something called rolling forecast. So every month you need to update your budget and showing to the management 12 months ahead or 18 months ahead. This will help you and the business to give and have full visibility about what is happening in the business. Update your OPEX, update your revenue based on the key dynamics. Can you imagine a company working in technology like OpenAI or whatever, and they have only annual budget? Every day there is new AI technology, right? Every day new competitors. We cannot, having only one planning scenario and comparing all the performance versus that for 12 months or 14 months, right? So we should have something called dynamic forecasting, like rolling forecast, or at least if the rolling forecast will be difficult to be implemented in your organization because of limited resources or because of system capabilities, whatever, at least having it on quarterly basis. So at least you should have like quarterly forecast dynamics. This is number one. Number two, also the last advice is having zero-based budgeting. I'm not asking everyone to have zero-based budgeting every year, but at least every 2 or 3 years, rebase your OPEX again, rebase your expenses again. Believe me, once you have OPEX and every year you have the annual inflation and having a number that's not fully justified and just inflated year over year, it's not the right base for your budgeting. So having a zero-based budgeting, justify every single number, understanding where I can reallocate my resources behind the right product, behind the right activities, will help you to rebase your budget. At the same time, also it can help you to have a big saving. I know big organizations already implemented the zero-based budgeting. They saved billions, not only millions. They saved billions because of the justified every single number in their OPEX budget. So those are the two advices: dynamic forecasting and zero-based budgeting. Thank you.
Thank you. Thank you. I really wanted to continue asking questions and picking their brain because I learned so much. But I need to give the opportunity back to the audience as well. I'll just open it up to question and answer. Does anyone have any questions?
Good morning.
Morning.
My name is Kunjan Choksi. I am the Director Corporate Finance at ATS Logistics. And thank you for the dais and all the speakers for the excellent thoughts and sharing your perspectives on the budgeting. My question is to Mohammed Ruby regarding we always think of spreadsheets, but CFOs are business leaders. So as a business leader, how do you account for the black swan events like war or pandemics or the supply chain bottlenecks? How do you account for that? And how do you include that in your budgeting as a this is no longer event which you can predict, right? And we see more of these tariffs and any uncertainties coming. So how do you account for it, and how do you protect the business in that context? Thank you.
Yeah, thank you very much. I believe that's a very important question. So I would like to share with you a real life example that I already implemented in one of my organizations during the COVID-19. So I believe FP&A role also is not only about budgeting and the planning and forecasting and reporting. We have an important role in risk management. So during the pandemic, everyone was talking about risks, and I believe all of you saw this type of comments. Why you have drop of sales because of COVID-19, right? Why you have overspending COVID-19? So it was a very famous comment. But the real thing is to understand exactly what are the key risks and how to quantify it. And this is the role of the FP&A and the finance team to quantify the risks. Because the risk, everyone knows the risk, right? Because of whatever, the pandemic or whatever, there are risks. But how to quantify that, this is our role. So in my organization, I sit with every function, get from them all types of risks, and started to ask the right questions. And we created something called, risk tracker. So for every type of risks, we asked them, okay, what about this risk? How much is the expectation impact on the business? Will that impact 2 months or 3 months or 6 months? Which product? Which cost center? So ask the right question for every single functions about the risk, and they try to create like a risk tracker. Okay, make it very dynamic, having list of all type of risk, operational risk, supply chain risks, sales risk, all types of risk. Okay, and sit with the function, asking the right question, and try to quantify it with the probability. What is the probability of it? So I see a risk of, let's say, 1 million. Probability is medium to high, so we can multiply by 60 or 70%. And on regular basis, I made it on weekly basis. I had to sit with all the leadership team, tracking all of this list of risks with their quantification, and we agreed on mitigation plan or action plan. Can you imagine every week we check this list, seeing where we progress with the action plans, and we succeeded, believe me, to mitigate majority of the risk. And at that year, we succeeded to present to the management our forecast, which was very, very close to the actual results. Why? Because we have a very dynamic risk tracking, asking the right questions, understanding the business, and having a deep dive discussion with every single department. So that's what I wanted to share with you.
Yeah. I think he mentioned a very valid point. I mean, the COVID-19 throw all our budgeting plan out of the window because everything has a hard reset. Anyway, we have one more. We have time for one more questions. Go ahead.
Can we...
That gentleman, yeah.
Sorry.
Am I audible?
Yeah.
Now I am. So, no, thank you for such an interesting discussion, and thanks for the panel inputs. And I don't have a question, I just wanted to add to what the gentleman raised, because that's something that as finance leaders and even on a personal front, it should give us sleepless nights. If something like that was to reoccur, what do we do, right? But one of the things from my experience I just wanted to share is that I come from banking background. I've been CFO with SocGen, I've been CFO with Royal Bank of Scotland, I'm working on a fintech startup. So what banking sort of does, and it's driven also by regulatory needs, but regulatory needs are typically to protect eventually even the worst case scenario, right? And that's where stress test comes into picture. So typically in banks, you will see they conduct stress test, and stress test is when extreme economic scenario hits, what do you do? How do you still keep the boat sailing? And that's one learning just I wanted to share with the group that, you know, in respective industries, organizations, where we are. At home, by the way, with what we do with our personal investments, right? The best example of how you deal with risk is what you do with your personal investments. You always do everything to risk-proof your personal investment. It's the same thing. So there's no direct answer to, you know, if COVID was to hit, what do we do? I think with COVID, we've become smarter, but the next one will be unknown. Most likely, it will not be COVID, it will not be what we've already seen. It will be a new dimension and a new crisis. But the stress test, typically, if you run it in a framework, gives you a lot more ability to deal with these situations. And there's no specific formula for a stress test. You know, it means different things to different industries and what's relevant to where you are.
Thank you. Let me just wrap up. I think we have really learning. I hope you learn a lot, as me as well. I learned so much from them. And I think just to wrap up is, I think technology is a success enabler. We need technology to make information, consolidate information faster. We need the technology to help us to analyze information. But at the end of the day, budgeting is still dependent on the detailed business planning, scenario planning as well, because the world is moving so fast. We have AI coming up. We have so many changes. I mean, Federal Reserve just reduce interest rate again. So things are always dynamic and volatile, and there can be a situation where some virus hit again. So our plan has to be dynamic. We always must be doing a lot of scenario planning to be ready to tackle the future. So anyway, thank you so much for the distinguished speakers. Really enjoy the time with you, and thank you everyone. Thank you.